So it's been about 1 year since I started investing with M1 Finance, a commission-free trading brokerage that's available to anybody in the United States. And M1 Finance has a lot of advantages and some disadvantages. So I'll be going over my experiences with you, the good, the bad, the ugly, if I'm making any profits from it, and all of that. So I've been through a lot over the last year. We all have, all right? The pandemic, the stock market crashes, the end of the biggest bull run of the last 10 years. And I'm surprised that we're all still alive. And luckily for me, M1 Finance has stood up the test of time for at least that 1 year. So let's jump right into the portfolio to get this started. If you guys want to follow me along on this journey as well, links are going to be in the descriptions for anything that you see in today's video. So I'm going to give you guys all the tips that I've learned over the last year. So you guys might have to watch this once or twice, and don't forget to drop me a like as well. So this is the Wang Gang 2020 M1 Finance portfolio. It is sitting at $18,032.64. So for anyone that is brand new to the channel, you guys don't really know the goals that I have when it comes to investing. I'm a dividend investor. What kind of person would wear a shirt that says dividend on it if they weren't crazy passionate about dividends? So my goal is to generate $200 worth of dividends every single month. Previously, my goal was 100. I hit that a few months ago, and now I'm very close to hitting 200, maybe within the next month. And I'm taking it $100 at a time right now. And M1 Finance is one of the biggest tools that I have to help me generate all of that dividend income. I recommend that if you guys are a long-term dividend holder, then M1 Finance is most likely the platform that you will go with. Robinhood is good as well. Vanguard, all the other ones that are commission-free are good as well, but M1 specifically checks off a lot of these long dividend investor advantages that I'll be going over. So when it comes to the performance for the last year, I am down $835.03. Total return is negative 11%. This is money weighted return. So this is a little bit different than what most people are familiar with, which is time weighted return. I'll kind of go more into the in depth on that later, but that is very specific to M1 Finance. Total net cash flow, I put in about $18,451. Market gains, negative $1,000. Most of this came with the crash in late March, which was around here. So you can see my portfolio at this time was around $10,000. So within the last 2 to 3 months, I've invested crazy heavily during that time, just because I know that, when all of my stocks are down 20 to 30%, the only thing that I can do is just reinvest in the companies that I truly believe in will survive the long term. That was just my move at that time, and luckily it paid off. The stock market has came back with a vengeance, and this video might not age well if another crash happens, but we'll talk about that later as well. I've been doing a lot better over the last few months. So let's take a look at the 1 month performance here. You can see that I'm up 5% when it comes to this money weighted return. In the last week, I'm up 3%. When it comes to the last day, there's been a little bit of loss and a little bit of gains. I gained about $10 worth of dividends and $81 worth of market loss. So let's jump into the holdings now. So this looks a lot different now, right? I own 32 different stocks and ETFs. Cost basis is around $17,000. Value of all of my stocks right now in the portfolio is around $18,000, and my unrealized gains, this is what you're more traditionally going to be familiar with, especially if you are invested with Robinhood, Charles Schwab, Fidelity, all those brokerages, they use on this time-weighted return. And on the time-weighted return, I'm up 2%. And I like looking at this one a lot better than weighted returns. So when it comes to this portfolio, if you guys want to see every stock that I own, links are going to be in the description. My biggest position in this portfolio is Realty Income. I own like 15% of my portfolios in real estate stocks. My second biggest position is going to be in bonds. I'm a little bit older than most of my general audience right now. I'm 32 years old, so I like to be more conservative with my investments, and I like to invest for the long term. I'm not doing it for penny stock trading, and I'm not doing it for day trading. If you guys are interested in that, M1 Finance is not for you. M1 Finance is the slow and steady way of getting rich, in my opinion. So the next biggest stock in my position, in my portfolio, is Visa, AT&T, JP Morgan, and going down the list, you can see like I own hundreds of dollars worth of each individual stocks. When I first started, my portfolio was only like a few $100s, and I only owned like $20 worth of certain types of stocks. And that's just how it goes. You know, when you first start out, I recommend that if you first start out, you should start out with a smaller amount of money, and then gradually, as you learn more about stocks, learn more about investing, you start to gain more confidence, you gain more experience, and that's when you can start putting in a little bit more money each and every time, every single other month, or however you choose to do your investing. So let's jump quickly into the activities chart for M1 Finance. Here is another great reason why I'm doing investing with M1 Finance. Look at all of these dividends that I'm receiving from the 32 companies that I own. All the way, I can scroll all the way to when I first started, which was in beginning of March. In the beginning of March, I owned these two companies and these two ETFs, and I was getting like 5 cents from these companies. And now you can see that I'm getting closer to like $10 with realty income, $1 here, $1 there. So I'm slowly growing this account. This has only been 1 year's worth of investing and growth through the crash. All right, I'm doing this through the crash. So you guys got a lot of people that's been investing through the crash haven't made this much, in my opinion. So in this last year, some of the advantages from M1 Finance that personally to me has been, amazing is they have free commission trades. That has changed a lot also within the brokerage industry, because a lot of other brokerages are now commission free. So that one kind of changed like halfway through that year. So the second biggest advantage when it comes to the last year for M1 Finance is their DRIP program, their dividend reinvestment program. So now, when I showed you earlier, when I first started, I was only seeing 5 cents here, a few cents there. Now I'm seeing a few dollars to $10 worth of dividends every single month. Those dividends are starting to really help out with the portfolio. It's almost like I created a friend that is helping me fund my portfolio every single month. And this is probably a good segue into my first pro tip. And that is, you have to use as many tools to your advantage as possible. And Simply Safe Dividends is one of the tools that I'm using personally. Simply Safe Dividends is a dividend tracker that I've been using maybe for the last few months now. And I have all of my portfolios on here, my Robinhood portfolio and M1 Finance portfolio. So let's jump into M1 Finance real quick. And this is my annual projected dividends for my M1 Finance portfolio. I'm projected to see $647 if there's no dividend cuts. In the month of May, I should be receiving around $45 worth of dividends. Next month, I'll be receiving $75 worth of dividends. And the future months, these are not including with whatever I'm going to be investing each and every single week. Every single week, I'm investing maybe around $700. That's my new target goal. My new target budget is to invest $700 into M1 Finance. I'm trying to get as much dividends as I can now so that the compounding effects works faster and faster. You can sign up with Simply Safe Dividends with the link down below for a 2-week trial. I paid for this myself. I'm not sponsored or anything, so that means I really believe in this company. This dividend tracker gives you a good gauge for the safety score of your dividends. So like Visa was one of my biggest holdings in M1 Finance, and the dividend safety score for Visa is 99. It also shows dividend growth, dividend yield, price, market cap. So all of this research information is all built into the app. I'm not trying to promote this or anything. I'm not sponsored, by the way. So this is just a great tool that I use. It really helped me over the last 6 months, and I really recommend it to you guys if you guys want to try it out. So going back to my annual projected income, going back to the biggest dividend payers in my portfolio, Realty Income, they're going to be paying me about $132 worth of dividends a year. AT&T is a big dividend payer, $58 worth of dividends a year. BND, Vanguard Total Bond Market, about $42 worth every single year. So hopefully you guys can see what I'm trying to do here. I'm investing in companies that have a very high dividend safety score. They have very decent growth. 20% is on the higher end, the dividend growth there. And like on the lower end, I have some companies that are a lot riskier, like DOW, Altria Group, ExxonMobil. Their dividend safety score is very borderline. So these are some of the stocks that I have to be on the lookout just in case they do dividend cuts. So moving on to the third advantage when it comes to M1 Finance, the one that helped me the most is, I would say, fractional shares. So if we take a look at my holdings here, you can see that I own 47.12063 shares worth of Realty Income. So this helped me out when my portfolio was a lot smaller. Now I'm able to buy whole shares of a lot of these stocks. When I first started, I couldn't afford whole shares of a bunch of these stocks. And I know for a fact there's a lot of companies out there that still don't have fractional shares, which I honestly don't know why companies can't have fractional shares. I think it's just basically a software issue or something, but I'm not a programmer. I wouldn't know. So let's say, for example, if you wanted to buy a company like Amazon. Amazon is actually one of the companies that don't pay a dividend. This is a new type of strategy that I'm trying to implement as well. But Amazon is worth $2,457 for one share. Not many people can afford to buy one share of Amazon right now, and that's where fractional share comes in handy. You can just purchase maybe $100 worth of Amazon. They'll give you a very small fraction of that. So I own about $500 worth of Amazon. My cost basis was $400. So you can see that I gained 22% on my original purchase of Amazon, and I own 0.2 shares of Amazon. That is such a small amount, but I still have gains on that. I can still gain on that. And if you go with companies that don't have fractional shares, you're going to be missing out on those potential gains. So M1 Finance has changed a lot over the last year. And one of the bigger changes was that they came out with their own debit card. This is the M1 Spend card. And I love it. I haven't used it that much, but they have the advantages of owning this card on the platform, and I'll go over that right now. So if you have cash laying around and you wanted to put it somewhere where it can earn some interest, putting it into M1 Finance, you can earn about 1% annual yield, which is a lot higher than a lot of other brokerages out there. You can also earn about 1% cash back on anything you spend with your purchases. I haven't used that very much just because I don't have a lot of cash laying around. Whenever I have cash reserved, I typically just invest that right away into the stock market because, I'm really going hard in the paint when it comes to investing in dividend stocks. So moving on to the next advantage of M1 Finance, I can borrow money against my portfolio. So now I can borrow around $6,300 at a 2% interest rate from this portfolio. So just in case, like a crazy emergency happened and I go through my entire emergency fund, I can still borrow money from this portfolio without selling any of my stock. That is a big, that really helps me sleep at night just because my emergency fund is not that big right now. But borrowing money off of my portfolio and being able to, I could just pay it back really quickly. That's a very easy way for me to get instant cash right away. And I think that you can only achieve this after you invest around $10,000 into your portfolio. And last but not least, one of the biggest advantages that I found from M1 Finance in the last year is that this feature is so useful, all right? Especially if you're trying to own a lot of different stocks, if you want to be very diversified with your investments. M1 Finance allows you to create these pies. And for me, it was a really great way for me to organize my entire portfolio. So for example, I didn't want my portfolio to just look like this, 32 positions just laid out everywhere, not knowing how much I'm invested in in each and every single sector. So I decided to put all of those stocks into different pies so I can see which pies are overweighted, which pies that I need to start investing a little bit more money into. And this is a representation of my entire portfolio right here. So for example, if we jump into the technology pie, you can see that I allocated around 15% of my portfolio into this sector. And it is very easy for me to see how this sector is performing compared to all of the other sectors or pies. And in this pie, I owned 5 different stocks, and great way to organize it. You can see how much better this has performed compared to all of the other stocks that I own in the portfolio. So when I first started, I was only investing, a few dollars here and there, testing out the platform, making sure that this is the right platform for me, and if I should start investing like real, actual money, not just like a few $100s every single week or so. I'm trying to think further along ahead if I'm going to be investing thousands and thousands of dollars into this portfolio. It took me about till December until I was really comfortable investing in these pies. So let's take a bigger look into the entire portfolio. So in December was when I decided to really ramp up how much I was investing in, and I started investing in like thousands and thousands of dollars every single month. And ever since then, it's been a wild ride. Like many of you guys, I suffered through the crash in March 23rd. It was a really dark day for me. I lost in that crash, I lost over $10,000. But if I decided to, just sell during that time, I would have lost out on so much more money than that because my portfolio has gained a lot since then. When the crash happened, that's when I decided to start investing thousands of dollars in my portfolio every single month to just ride that wave up as high as it can go. And hopefully there's no more crash coming along. I don't want this video to age very poorly. So another example of a good pie is in consumer defensive for me. You can see this pie is worth $2,300 basically. And I own 5 different companies in here as well. So this is a great example of just all of these companies are consumer defensive companies within this pie. Very organized, very easy to read. And there are some companies that, there are some sectors that I don't really want to invest in, like the utility sector. But I do want to be exposed in there, and that's why I'm invested in one company here. Consolidated Edison isn't doing so well, but this is a top utility stock within this sector, and I'm in it for the long run. I only try to buy companies that are proven blue chip stocks that pay a dividend. And now let's take a look at some of the parts of M1 Finance I wish they could fix. All right. So these are the cons of M1 Finance. Yes, there are a few. It's not a perfect system. Okay. So first off, trading windows. You can't just buy and trade whenever you want. There are trading windows, and this is what allows M1 Finance to lower their cost on those commission-free trades and a lot of other costs as well. So on M1 Finance, you only have 2 trading windows. There are also some stipulations on that. If you want a afternoon trading window, you either have to have M1 Finance Plus, which is this, and that comes with a fee. Or you have to have $25,000 invested in the portfolio. Right now, I'm $7,000 away, so I should get there really quickly. And if I wanted to, cancel this card, I could, but I'm gonna stick with it for the long term. Typically, most people that use M1 Finance are gonna be long-term investors anyways. This is their target audience. And long-term investors invest throughout all the good times and all of the bad times. So if you're one of those guys that, has an itchy finger or, gets really scared really quickly because you hear some bad news from Google News or from a news source, CNN, fake news, whatever the case may be, M1 Finance is not going to be for you, especially if you have really itchy fingers and you need to sell or buy really quickly. The second biggest disadvantage, in my opinion, is that they are a little bit confusing when you first start out using them. So it took me a few months to get really comfortable using M1 Finance. And that is also because I wasn't that experienced in investing in the stock market as well. So I'm trying to put myself back in my head that during that time. And creating these pies was something that I had to learn along the way. I didn't just create these pies right away. So I could make a tutorial about it. Let me just do it right now. So if you want to create these pies and get your portfolio looking very similar to mine, all you have to do is go into the research function, go into the My Pies here, and there's a button here where you can create a new pie. So if you want to add in the stocks that you want, you can do it this way, or you could go back, add multiple stocks with this checkmark list system, and then all the way on the bottom here, you just press add, and this will automatically generate you a pie. So that's what I did for each and every single sector in my portfolio. And lastly, you would just put in a title for your pie and then add it to the portfolio. Or you can just keep adjusting it until you have it perfectly the way you want it. So that's why it was kind of confusing. I know I have a little bit of experience doing it because I've made a dozen pies since then. You can see all of my pies here that I've played around with. So it takes a while to get used to it, but for anybody that's beginner, it's very easy to just start doing it maybe after a few days and you'll just get the hang of it. So one last advantage that I forgot to mention is that this is a pretty passive system the way that I have it now. So now that I have the perfect portfolio, in my opinion, you guys, a lot of you guys disagree with that, but everybody has their own risk tolerance. So when it comes to all of my deposits that I put in every single week, a lot of the times I just leave those deposits to go auto invest. And when M1 Finance does auto invest, it firstly takes a look at your pie here and finds out which pie is overweighted versus which pie is underweighted. And if they're underweighted, they invest more in those underweighted pies. So M1 Finance will take a look at your actual versus targeted weight for your pie, and also your gains versus returns on your pie. And then they'll automatically invest in the companies for you. I've let M1 Finance do this a handful of times. And there were also times where I wanted to buy the dip on some of the companies and just do it myself. So it's entirely up to you. But for me, I use this about 80% of the time. I just let M1 Finance purchase all of these stocks for me. And they typically do it earlier in the morning versus on the second window whenever I let it do it automatically. So if you guys want to follow along on this M1 Finance portfolio, I'm trying to get as much gains as possible. I'm trying to live off of the dividends when I'm old, retired, and can't work anymore. You guys can follow along and watch these videos here, or you guys can like, subscribe, hit that notification, and you guys will get the newest videos every single week. You guys also follow me on Instagram, follow me on my second channel, and I'll see you guys next time. Thanks for watching. Bye.